Going to the MENA region, we're very looking forward to having this conversation what's happening in Middle East, North Africa. Let's start with Egypt inflation. July year on year, 25.7%. The estimates were 26.6%, so that decelerated. June was 27.5%. Month on month, look at that, 0.4% down from 1.6%. So that's as far as inflation is concerned. We'll talk about the triggers in just a moment. Egypt, merchandise exports to Saudi Arabia, $1.5 billion with a B, 13% year-on-year growth. We're going to talk about that in a moment. What else is going on in the Middle East and North Africa? This is ART. ADQ from Abu Dhabi, their investment vehicle. They've acquired a minority stake in Sotheby's. Sotheby's, of course, is an art dealer. $1 billion worth of that stake. We'll talk about the attractiveness of the arts as far as an asset class is concerned. And then aviation, Etihad, half-year 2024 earnings. Of course, revenue coming in $3.2 billion, 21% growth. They carried 8.7 million passengers from January to July, and I think that's the 38% year-on-year growth is higher than the average for the other airlines within that region, which I think was about 13% or so. Net profit coming in 48% higher, 232 million. I think that's a new record for the Etihad. Also, Saudi Arabia, they are bringing out some new laws to encourage investments in the region. We're looking at their recent pro-investment initiatives. Let's get into it. We have Babajide Lawani, MD CEO of CFG Africa Limited, to join us to talk about this. Good morning to you, sir. Thank you so much for being with us.
Thank you, Rutus. Thank you
so I guess let's start with South Africa, Saudi Arabia. These new laws that they're looking to put in place to attract investment, what do you make of it? And in fact, what they've done recently to attract investment to the region.
All right, thank you for having me again. I think you've said it right. It's a diversification agenda, right?
Yeah.
So let's put things in context, right? If you look at the Saudi exchange, right, the total market capitalization of that exchange is about $2.7 trillion.
Wow, that's big. Yeah.
Now, of that $2.7 trillion, Saudi Aramco accounts for about $1.7 trillion. So it puts things in perspective to say, one, Saudi Aramco is state-owned and it is oil-focused.
Yeah.
So it tells you that there's a significant dependence, right, on oil. And secondly, it's a government-led economy. Now, if you're going to move away from that, right, you have to do things systematically. The laws are actually updates, right, to try to encourage private participation in the economy, foreign investments, and the establishment of a special economic zone to sort of allow for tax incentives and foreign direct investments. So those are things that they are doing, right, at the base of it. And we've started to see some of the things. I mean, people watch football.
Yeah.
The Saudi Pro League, all of a sudden, is becoming at the forefront of football, right? Those are things you will start to see in terms of them making Saudi an investment destination beyond oil.
Right.
We've seen, if you look at, there's a report that speaks to Riyadh's recent inclusion of companies, right? Consulting companies, a lot of companies are now situating their regional head offices in and around Saudi Arabia, just to encourage that diversification from oil, to encourage private sector participation and sort of diversify the economic base at large. So when we start to see that market capitalization shift away from that focus and that concentration around oil, then that will probably be an indication that the objectives that they are trying to achieve have started being ticked off on.
I do want to thank you for that. I do want to take a look at a couple quotes from Saudi Arabia's Minister for Investments, Mr. Khalil, I think is his name, or Falil. He did say here that the policy direction outlined in Vision 2030 allows investors to invest with certainty and grow with confidence at a time when many other markets are experiencing considerable volatility. So Khalid Falil. Okay, yeah. And then he also said, I think there's an extra quote here. The updated investment laws build on an extensive diversification agenda. That's what you mentioned, from an enhanced quality of life offering to investment-specific measures such as the establishment of the special economic zones, which you have mentioned. So they're moving in the right direction, basically.
Completely.
Yeah.
And I mean, let's step back a moment. 10 years ago, if you thought about Saudi, what were you thinking?
Just oil, deserts.
Deserts, oil,
yeah.
and then religious tourism.
Right.
Today, if you are thinking Saudi, the perception is different.
Yeah.
Right? And it starts with that. Once you start to change the perception, people feel like they can come and do business, and then things start to open up. Just like what the Dubai, UAE has done significantly over the years.
Yeah. I want to move to Egypt, and I know you guys over at CFG cover them.
Yeah.
The inflation figures that came out for July, we're expecting inflation for the US, UK, Nigeria later this week. What will be the triggers for the deceleration for Egypt inflation?
I think, if you look at Egypt, right, Egypt has been, it's a very similar story to Nigeria.
Yeah.
Our report was similar stories, different outcomes.
Yes.
Yeah, right. If you look at Egypt, essentially, Egypt has gone through the same kind of problems in terms of FX volatility. And then, of course, they are contextualized by regional tensions in and around them, right? What has then happened is that they've done a very good job of stabilizing their currency. It has been supported by, of course, bilateral help from countries in and around them. Of course, there's an IMF program that has provided significant liquidity into that market. And of course, based on that, foreign investors have found confidence and have moved in significantly. And so we've seen a stability on the currency side. And so that combined with very important fiscal discipline, right? So putting things in context again, Egypt has done a good job of reducing subsidies, right, over the years. They've been doing it gradually, right? Although they did one on bread very sharp recently, but if you combine what they've done on the FX side and you combine what they're doing on the fiscal side, it has started to moderate their inflation, right? Reducing their deficit and then strengthening their reserves. That has helped them a lot. And the prognosis is that they expect it to keep decelerating, and that will then trigger a possible reduction in rates if it gets to that point.
So I think we have a cover of that report that you put out in terms of Egypt and Nigeria. I think you have the GDP figures where Egypt is, I think, the largest in Africa, and Nigeria has fallen to third. Yeah. So what are the, there it is. So that you mentioned similar stories, different outcomes. What's the lesson for Nigeria here? I mean, in terms of, is it that Egypt also has, you mentioned the volatility and the tensions, but Egypt also has some pretty rich neighbors. So what is that the advantage over Nigeria? What can we learn?
I mean, at this point, right, if we look at, let's narrow it down to the FX situation, right, which is plaguing both nations, right? But we found that foreign investors have found it more comfortable going into Egypt than coming to Nigeria. Now, Nigeria has done, and I must give the CBN some credit, right? Putting out policies. I mean, recently they brought back RDAS, which is just to support liquidity in the market, right? I think the missing link may be the fiscal discipline on Nigeria's side. Right. Egypt has done a good job of tightening the belt a little bit, and then they've stuck to a program. I mean, yes, in conjunction with IMF, but they've stuck to a program to try to ensure that they sort of block the leakages and then ensure that they shore up the economy in that regard. So Nigeria needs to learn that fiscal discipline is key. But if you look at things, again, from another perspective, liquidity from the rich neighbors, liquidity from IMF has significantly supported that market. Now, Nigeria is coming out with a domestic Eurobond. We expect that to help, right? So that sort of, again, buys us a bit more time. Yeah. But what needs to come back is that fiscal side needs to support all the work going on the monetary side. Gotcha. So that stability we can start to benefit from, because Egypt is doing a lot in terms of investments in supply chain. They're doing a lot in terms of course, we saw their numbers in terms of export increasing. Right, to Saudi Arabia. Yeah. Exactly. Yeah. So those are some of the things that they're doing very deliberately to sort of help the situation. Monetary policy alone cannot solve it. Gotcha. In terms of that, in fact, that 1.5 billion in merchandise exports, I mean, there's also an issue of power, right? Electricity and all those other things, right? What do you make of that export number funny, Saudi Arabia we're just talking about a moment ago? Yeah. I mean, to be honest, I think at the end of the day, you must take advantage of the opportunities you have. Yeah. You have rich neighbors, and they sit in a very unique place, right? Egypt is literally the link between Middle East and Africa because of the Suez Canal. Yeah. Right. Nigeria also sits in a similar position. But how are we taking advantage of the opportunities that exist in and around us? Because we have our ports are very huge, and we have an opportunity in that regard. Yeah. But come back to the export, you realize that they've done very specific things. They're investing heavily in supply chain, in logistics, to try and make that very easy, right? And then, of course, they are strengthening trade ties with their neighbors, giving them the opportunity to also earn FX. And that way, it is also supporting the economy.
Gotcha. To Abu Dhabi now, I want to get your thoughts on, I guess, art as an asset class. Them taking a stake in Sotheby's to the tune of worth about $1 billion or so. What do you make of that? And I guess as art, how does CFG Africa view art as an asset class? What do you make of it?
I mean, to be honest, globally, I think the approach to asset allocation and asset classes are changing, right? Specifically, we think that it is a growing asset class. Recently, I mean, in another report, we did a lot of work around the creative sector.
Okay.
Right? And we think that, I mean, when you're thinking alternative asset classes today, you're not only thinking about real estate, you're not only thinking about Brent or the soft commodities, right?
Yeah.
We are beginning to see movement in this direction. Now, this is encouraged by things around tokenization, right? Tokenization of digital assets, right? That gives opportunity for these so-called arts to be split in more retail fashion and sold to multiple people. But specifically, I think that it is a portfolio diversification for Abu Dhabi. I also think that they are taking an early position. That early position allows them understand how that market plays, right? Because again, Sotheby's are positioning themselves as providing price discovery for art. Now, when you have price discovery in a market, you have so-called an arrangement that can become an exchange. Tomorrow, I mean, if you've taken a position early, the advantage there is that other people will come into the market, and at that point, right, the valuations we're talking about will not be what it will be today.
Yeah.
So I think that is sort of the thinking in and around this move.
Great stuff. We've talked about so much. I'm enjoying this. Aviation. There's been a lot of talk. I think we've now been, Nigerians are now allowed to travel over to the UAE now. The Etihad, if you take a look at their numbers, what do you make of this? Because they keep breaking records. This time they release their earnings.
I mean, we all know that for the UAE, tourism is a major part, all right, of their economy. I mean, if you look at the numbers, you pointed at the passengers and the growth in passengers. We also realized that oil prices dropped slightly between last year and this year.
Yeah.
So there's an advantage there. But there's a part that this report also needs to also cargo. There's a lot of movement.
That's another revenue source there.
Yes.
Yeah.
So if you combine what is going on in terms of passenger growth with what is going on in cargo with lower oil prices, I mean,
it's a recipe for record earnings there.
Yeah. Exactly.
Fantastic. Okay, I guess, so when we, zoom out, take a macro look of the MENA region, that's Middle East, North Africa, how do you see the economy for the region?
I mean, I think at the end of the day, what you will realize is that the region is, I mean, you were talking about some tensions.
Yeah, the whole Iran-Israel thing, yeah.
So that is one kettle of fish, right? Oil is another kettle of fish, right? At the end of the day, most of the countries in another region are trying to diversify away from oil, for those that are focused on oil. But there's the geopolitical tension that contextualizes the entire region. And that makes it a very careful place to go. I think as that is resolved, right, and the diversification agenda continues to move forward, I think that may mean that we will see a better, or we will see MENA as probably more investment friendly as we go along. But for now, of course, everybody is on the sidelines and it is very country specific. So if you notice, we've only spoken about 2-3 countries and maybe 1 or 2 others that people are really talking about. Saudi, UAE, maybe you talk about North Africa corridor, Egypt, and then maybe Morocco and Algeria, and then probably Qatar. The rest are either rich islands that are probably not really connected to the global economy, and the others you probably cannot touch, like Iraq.
Gotcha. A fantastic discussion. I've got to bring you back. I love what you guys are doing, covering the MENA region. It's really informative for investors. Babajide Lawani, MD CEO, CFG Africa Limited. Thank you so much for your time. Really appreciate it.
Thank you.